And Michael Lee, otherwise known as the Bull in the China Shop, is with us this morning. All right. Would you buy Facebook right now, this morning?
Yeah, Stuart, yes. I think you had Facebook on weakness. I think this whistleblower that came out yesterday is a bit of a smokescreen to give them more cover to basically censor conservative posts and conservative pages on Facebook. But look, Facebook is the new sin stock. You know, their algorithms, they've got it down to a science. It's highly addictive, and it's the most effective form of advertising that's ever been created. So until something comes along better, it's a stock that you're going to want to add on weakness.
I see the point, Michael, but, you know, the case against Facebook is pretty strong, and they've been lying. And politicians don't like that from both sides of the aisle. And some form of regulation that hurts their business is going. I think it's going to happen. And if I'm going to buy that stock, I'd have to think about what damage it could do to my business down the road.
Well, you know, Stuart, Mark Zuckerberg spent $500 million on this last election in terms of a nonprofit to help secure drop boxes and all sorts of other things in swing states that effectively, according to the Time Magazine article, swung the election for Joe Biden. So and they're one of the largest lobbyists in Washington, D.C. on both sides of the aisle. So until politicians stop taking donations, I don't think there's going to be any sort of regulation that's meaningful in the way of Facebook. They're just too big, too powerful, and they have too much money.
Okay. You're not supposed to say this, but only time will tell. Now, I believe you're still bullish, and you think we've got another few years of the bull market still to come, correct?
Yes, Stuart, so you've been calling me the Super Bowl, and what I've said is basically the market's going to go in one direction until the Fed becomes very active and sends us for a spin. And so Jerome Powell effectively did that a couple weeks ago. And once interest rates find a home, whether it's at this 10-year at 150, 165, or up in the kind of 178 range, then we'll start taking off again. But while we're volatile and there's uncertainty in the interest rate market, we're going to see some uncertainty. And underneath that uncertainty, as rates go higher, tech becomes less favorable. The techs at really high multiples suggest a economy that's low growth, low inflation. So you're going to pay up for growth. And if we're going to have higher growth and higher inflation, cyclical value stocks, energy stocks, those things will lead the market. So I think once interest rates settle, we're off to the races, but that could be months from now.
Once interest rates settle, we'll be off to the races. That could be months from now. I'm focusing on that. Oh, look at this. The open bell is ringing. And you know